CrowdStrike has been performing very well as of late, at least in the terms of their stock. They're up 480% over the last 5 years. They IPO'd in the middle of 2019, so most of the history of their stock is in the last 5 years, but they've been performing very well nonetheless. They've also made a name for themselves earlier in the year, back in July, when they had a massive outage, which crippled quite a few industries, one of which being some airlines. And that was a rather big deal. We aren't here to talk about that particular instance too much today, other than to say, ironically enough, I think it really just paints the picture of how much CrowdStrike is used, right? So they are primarily do security, right? Provide cybersecurity solutions in the United States and internationally. Cybersecurity is very important for not just tech companies, but all companies, right? Because even though hackers are rare, someone with the right information can do a lot of harm, right? We see data leaks constantly, certainly for those who are older. I know people personally who had Social Security numbers and stuff leaked over the years. So it's a big deal, right? Cybersecurity is here to stay, and there's only going to be more money poured into it. One thing you might be drawn to in this company is their PE ratio, 435. That sounds absurd. However, my first instinct is that's probably not their actual PE ratio, even though they've gone up a considerable amount over the last 5 years. Probably they're just starting to become profitable. And when we look at the numbers, that's probably pretty clearly the case. Their forward PE is 82, right? So that's probably a little bit more realistic to what you're looking at, which is still a very high PE, but it's a lot less extreme. Usually I don't look at these for these videos, but it's important in this, right? You can see total assets from 2020 to 2024. I mean, it's basically 5x'd over that time frame. I mean, you see the growth in liability as well, about the same, but still you're seeing a company that is growing a lot, right? Excuse me. Clearly don't pay a dividend. Most stocks they're basically, CrowdStrike's in a huge growth phase, right? They aren't really super concerned about taking profit and distributing to shareholders. They're focused on growing clearly, right? Just becoming profitable, just getting some positive cash flow. They're focused on growth. So with this, you are going to get a company that is expensive, right? There's no way to deny that. 82 PE, that is expensive. That's not super cheap. It's pretty realistic. This is the base I'm using, the forward PE, right? But that doesn't mean it's bad, and that doesn't mean it's too expensive to buy today. If you're looking to hold this company for the long term, invest in a company that so many companies use that's super vital, like this, you're going to do well long term, likely, right? Now, obviously, anything can happen. There could be a competitor. They could be lying, cooking books. Anything can happen. However, long term, outside of risks that is generalized to every company like that, right? This company should perform fine. Now, if you're like, oh, I bet this is going to just run back up to 380 or whatever, it could do that. I don't know. That's not the sort of thing I do. I'm an investor. I look long term. Long term, CrowdStrike should be fine. They should. Right? Key industry. Not a lot of competition. They're one of the largest players in it. They're going to do fine. They likely will. So if you want to get on this company, you may say now is expensive, but it's probably always going to be expensive. We can see the forward P has fluctuated, right? It was 49, 78, 74, 57, 71. They use a slightly different metric of calculating PE on this site. But relatively, yeah, you might be able to hold and get it a little bit cheaper like you would have gotten, back when it hit close to 215. Sure, right? You may wait out for that, but you may also miss the ride. It may just shoot up and it'll never be cheap enough for you to buy. That's okay. There's nothing inherently wrong with that. If this stock's too expensive for you, that's okay. And I wouldn't I wouldn't be super concerned, right? If you are a person who panic sells, right? If the economy were to do bad, right? Generally, quote unquote, inflated or highly valued tech stocks generally kind of get beat down, right? It's just the nature of things. When things go poorly, Procter and Gamble's gonna perform a lot better in a recession than this company is, right? CrowdStrike is. That's just the reality of things. That's how the world works. Unless they're doing phenomenal during the recession, that happens too, right? Like, for example, Amazon or something, right? But you just got to factor that in. If you're someone who struggles holding long term, whatever it may be, I would be more cautious about this. But if you're someone who's just, I want to invest in industries long term, just hold and wait, you're going to do well in CrowdStrike. I think so. I think it's going to do well. I think long term, this is a good company. They're well positioned for the future. They're growing really fast. I wouldn't be super concerned, right? But you may run sideways for a while. Some of my best performing stocks, I held TSM sideways for like 3 years, and then it did well, right? It's one of the best performing stocks as of recent that I hold. So that sort of thing happens. Anyways, I'm getting a little bit too in the weeds here. Let's take a look at what some analysts have to say. Schwab thinks it's going to do 52. Generally, you see C and you think terrible, but the average stock performs well, right? The average stock throughout the market goes up in any given year. So they think it's going to do fine. However, this is a 1 year outlook. They don't think it's going to do phenomenal. So I'm kind of in agreement there. I think short term, who knows? Long term, this is a good stock. 3 stars, narrow. I disagree, right? I'd have to give it closer to wide. I hate the 0-3-10 scaling they have here, but I'd probably lean more towards wide than narrow, personally. 4 star, buy, long, buy. Moderate ESG score. Take a look at it. So what some analysts have to say. Everyone's saying buy. Holy crap. Of the 51 analysts, actually none are for October. So we're going off September, I guess. In September, what was that? 44 of the 51 say buy. And there's another handful that say hold, and like one guy that says underperform. He's not even telling you to sell. He just thinks it isn't going to do well. Mostly joking, right? I don't really care too much what analysts have to say. It's important to factor in, right? It's a factor in the broader picture of the stock, right? So just to wrap, I think CrowdStrike long term is fine. They have a high PE, but stocks that are in important industries and have performed well and are growing are going to demand that sort of PE. That's just reality, right? So anyways, that's all I got. If you enjoyed this video, I'd appreciate if you left a like. Subscribe if you like my other content. I do a lot of videos similar to this, covering all sorts of stocks. But if you enjoyed the video, just want to leave a like. That helps the channel out. It helps the video performance out. When people watch and leave a like, it really does. But that's all I got for today, so I'll catch all you guys next time. Thanks for watching.